I will now hold the public committee meeting, starting with the Committee on Finance, which will be chaired by Commissioner Cohen. That'll be followed by the Committee on Capital Planning, Execution, and Asset Management, which will be chaired by the Vice Chair. And we'll conclude the public portion of today's meetings with a public board meeting. Commissioner Cohen.
Thank you very much. Today's meeting of the Committee on Finance is being held in public session in its entirety. At this point, I ask the Secretary to advise those present of the composition of the Committee on Finance and any commissioner recusals on the matters before the committee at today's meeting.
The Committee on Finance is composed of Commissioner Cohen, the committee chair, Commissioner McCabe, the committee vice chair, and Commissioners Kelly, LaBarbera, and Richardson. All committee members are present. In addition to the committee members, Chairman O'Toole, Vice Chairman Linford, Commissioners Bulwage, Eve, Fisher, and Helmy are also present. There are no requests for actions and therefore no recusals required.
Thank you very much. Always at the ready. There's actually no need to call on our Chief Financial Officer. She's already at the podium. Libby McCarthy, I turn it over to you.
Thank you, Commissioner, and good afternoon. So today I will be presenting the 6 months results. Just going to start with my usual reminder that the unaudited condensed financial statements as of and for the 6 months ended June 30th, 2023 should be read in conjunction with the financial statements of the Port Authority and its component units and the accompanying notes in our December 31st financial statements available on our website. Any information that's provided herein with respect to forward-looking impacts from COVID-19 represented the Port Authority's current assessment based on the data it had available at the time the financial information was presented or compiled. In addition, the financial results that I'm presenting today were prepared in accordance with the Port Authority's bond resolution, and it is a basis of reporting that we use to set the Port Authority's budget. This information, along with the unaudited condensed financial information presented on the basis of generally accepted accounting principles, are in the financial statements that will be posted today. So overall, Port Authority had a very strong financial performance in the first 6 months of the year. We had net operating revenues of nearly $1.4 billion, which is a $172 million or 15% increase when compared to the same period in 2022. As compared to the 23 budget, the net operating results for the 6 months was $54 million or 4% higher than planned. After factoring in other non-operating revenue items and the non-cash market valuation of our investment portfolio, the authority's net revenues available for debt service in the period totaled more than $1.8 billion, an improvement of $445 million when compared to the same period in 2022, and that was also $89 million higher than planned. These results are driven by a number of factors, which I'll discuss in greater detail as I move through the presentation. Because many of the Port Authority's revenues are driven by our activity levels, I'll start with an overview of the activity at our various facilities. To orient you, this slide and the next, on those, the blue line represents the pre-COVID 2019 activity volumes at our facilities. The yellow line is last year's result for the period, and the green line is this 6 month period. This slide shows our bridges and tunnel activity on the left and our path ridership on the right. Bridge and tunnel activity was quite strong during the 6 month period, exceeding the 2019 levels in each month. The unseasonably mild winter weather led to higher activity during the first quarter, and there continues to be strong truck activity at the Port Authority's facilities, which contribute to the strong performance year to date. TB&T volume for the first 6 months was 3% higher than 2022 levels and 1% higher than budget. PATH, like other mass transit commuter systems in the region, continues to have a slower recovery in ridership since the onset of COVID-19. PATH ridership for the first 6 months was 24% higher than the same period in 2022, but was 60% of pre-COVID 2019 levels and was 6% lower than budget for the period. On this slide, you can see our aviation and port activity. The aviation volumes for the 6 months had significant recovery this year, and we're 19% higher than 2022 levels, and we're also 2% higher than budget for the period. Aviation activity continues to experience high demand for travel, particularly on the domestic side, with more recently international and business travel starting to recover. The slight downtick in activity that you see on the slide for June is a result of fewer flight operations due to the poor weather conditions in the month, both from the storms but also the impact of the smoke from the Canadian wildfires that have impacted air travel. Despite this, the agency's airports experienced record volumes in the first 6 months of the year. Our port activity remains strong as the total port volume for the first 6 months of the year was also 102% of 2019 levels. And year to date, the agency's ports are the second busiest container port system in the United States. Port container volume was 24% lower than the same period in 2022 and was 17% lower than budget for the period. This lower activity level was driven by macroeconomic trends both in the region and globally. So moving to gross operating revenues. For the first 6 months, the gross operating revenues totaled nearly $3.2 billion, which is an increase of $300 million, or 11% versus the prior year. As compared to budget, operating revenues for the first 6 months were $50 million, or 2% higher than planned. We have the component parts of the agency's revenues, so I'll just walk through quickly those. Tolls and fares of $1.1 billion for the period were $85 million, or 9% higher than the same period in 22. That was driven by that activity volume that I discussed earlier, as well as the impact of the previously approved CPI-based toll rate increase at our bridges and tunnels that took effect in January of this year. Rental revenues of $1 billion are 13% higher than the same period in 22, primarily driven by activity at the airports, as well as new rents associated with the various airport redevelopment projects. Aviation fees of $732 million are 9% higher than the same period in 22. These fees are primarily comprised of cost recovery at the airport, and they also reflect the increased operating costs to accommodate the growing activity volumes at the airport. And then finally, parking revenues were up from the prior year of $31 million. As a result of the higher volume activity at the airports. Moving on to operating expenses. Operating expenses for the first 6 months of the year totaled $1.8 billion. That's a 8% increase over the prior year. That's a result of, again, responding to those higher activity volumes across our facilities, as well as some incremental costs necessary to maintain and operate the airtrain system at Newark, as well as the cogeneration plant at JFK. Compared to the 23 budget, operating expenses for the first 6 months of the year were $5 million lower than planned. I want to highlight that we were lower than budget in two large categories, employee compensation and contract services, both of which benefited from the lower than expected snow and ice removal activities in the first quarter of 2023 due to the milder weather conditions. From a cash flow and liquidity perspective, cash flow from operations for the first 6 months were nearly $1.4 billion, which was in line with the same period in 2022. Cash and investments on hand at June 30th totaled $4.8 billion, an increase of $600 million versus year end of 2022. And in addition to cash and investments, the Port Authority also had roughly $450 million available to support the capital program. That consists of $225 million in funds currently on hand in our capital fund and $225 million related to our open revolving bank facility. When excluding the General Reserve Fund and capital funds, cash on hand represented 215 days at June 30th. And finally, our bonds and other obligations at June 30th totaled $29.5 billion, which is an increase of $1.1 billion from year-end of '22. This is primarily a timing-driven result because we borrowed money in June, issued consolidated bonds in June for the purpose of refinancing over a long term the 3-year consolidated notes of $1.1 billion that were issued in 2020 as a result of COVID and were due on July 1st, and those notes have been paid off. That concludes my results, and I'd be happy to take any questions.
Any questions or comments from any commissioners? Hearing none, you have our thanks as usual, Libby, for a great succinct report. Thank you.
Thank you.
That concludes the meeting of the Committee on Finance. Back to you.